Hello, and welcome to another video. Thank you for joining us today. Today we are going to tackle something that I have tons of conversations with clients about, with prospects about, and this is a topic that many people aren't quite sure which way they should go. It is, should you pay off your house early or not? Should you keep a mortgage? Is it good to have mortgage debt or is it not? And so we're going to tackle that topic today and see if you should rush through and pay off your mortgage or go the slow and steady 30-year mortgage that you most likely have. Some people have a 15, I know, but most people have gotten a 30. And this is a very relevant topic now because a lot of people got their homes when the interest rates were like 2, 3, 5%, right? And now we're at 7, 8% on mortgage interest rates, and it's obviously slowed down the markets quite a bit when it comes to real estate. And not as many people are going to have an 8% mortgage as people that have 2 to 3%. So people who have 2 to 3% mortgages are now saying, well, should I really pay this off? I mean, nobody can get debt like this at this rate, for years probably. We don't know. The Fed has not lowered the rates, so who knows when they're going to do it, right? They won't commit to when they're going to do that. So, should you pay it off or should you not? That is the question. We're going to go through the pros and cons, and I will actually give you my opinion. For the majority of people, of course, there's always exceptions, but for the majority of people, whether or not I think they should pay it off. So you will get that at the end too, so stick around. Now, who am I? I'm a financial advisor. I have been for over 13 years, Lisa, and I help people get to financial independence as quickly as possible. And, sometimes that's retiring early. That is going to be one of the topics that we're going to talk about in this because that's going to make a difference whether or not you should pay your house off early. So let's go through the benefits of paying off your house early. What are some of the benefits? Well, first and foremost, who wouldn't love to not have to pay a mortgage payment, right? I mean, not have a rent, not have mortgage payments, just pay, for property tax and maybe an HOA fee, and that would be it. That would be a lovely existence, right? It just give you so much more money that you could save or you could spend. I'm hoping you're saving and not just spending it all, right? But it gives you a bunch of different options of what to do. Everybody would love that. There's not one person I know that would say no to that, right? But, obviously people say, well, I have a really good interest rate. I have a 2.5 or I have a 3.5 mortgage. Should I really pay that off? And the thing is that you are paying interest on your home. So if you bought your home for $500,000 and you've got a 3% interest on it, you're paying more than what the purchase price of the home is, right? Now, some people would say, well, 3% interest rates, house prices are jumping up, 4, 5, 6% in our area, so that totally makes sense to keep it. And we'll go through that argument in a little bit, but in one respect, a benefit is that you would be actually saving money on your house because you would not be paying all that extra interest that is accumulated on your property. And peace of mind, just knowing that your house is paid off. I heard Morgan Housel is a very good financial writer out there. He wrote The Psychology of Money, and he's got a new book out that I do not remember the name of, but I will pop the name up for you in the video so you can check that one out too. And he paid his house off, and he has no gripes about it. He's had financial advisors and everybody send him spreadsheets about how he made a mistake and everything else. But he said that he wanted that peace of mind that this is mine. This is my home. Nobody can take it away from me. It's mine. I don't owe anybody anything. It's our home. And he had a conversation with Tim Ferriss, who is a podcast host. A lot of people know him. I listen to his podcast all the time. I think it's a fantastic podcast. And Tim Ferriss paid his house off too when he thought about it, because he said, that's true. I just want to have the peace of mind that my house is paid off. And there's absolutely nothing wrong with that. Peace of mind. Look, it is stressful enough out there, right? Having peace of mind that your home is paid off, that you own it 100%, there is nothing better than that. And I can speak from experience. Our house is paid off. Just FYI. So I agree with them. It is a nice peace of mind to have your house paid off. And you can't really get around that. It's a nice, it takes stress off of you for sure. And it improves cash flow. You know, we talked about, you know, how nice is it not to have a mortgage? You have better cash flow. You know, we are able to hit savings goals that I never thought we would be able to because we don't have a mortgage. And a lot of clients that I have feel that way too. They feel like they can save more. If their goal is to retire early, it just means that there's less money that they need to save in order to survive, in order to live, in order to have your nut every month is a lot lower. And so instead of having to pay, you know, save $3 million to retire early, they now maybe only have to save 2 or 2.5. It just depends on what their number is, right? So don't take 3 or 2.5 as your number. You don't know. It just depends on what you need. But it does make saving for early retirement a lot easier because you have less expenses to have to deal with. Now, there are some downsides to paying off your house early, of course. A liquidity issue, right? If you are not saving and having liquidity someplace else, all of your money is going into your home. Let's say, you know, you live in an expensive state and all of your savings is going into trying to pay your house off early, and something happens, you don't have that capability very easily to get money out of your house. There is possibilities, obviously, you can, you know, do a mortgage out kind of thing, but who wants to do that with the rates that they're at right now, right? So when you put it in, there's not a lot of liquidity that can happen with your house. So you always want to make sure that if you're paying your house off, that you have adequate liquidity someplace else. And that does not mean just putting in your 401k. That means actually having liquidity, having money you can get to, because the 401k, remember, has that 59.5 rule on it. And also when you're working there, you can only take a loan. You can't even take a withdrawal for the most part for 401ks. So that's one thing to consider. Opportunity cost. A lot of people make this argument, and this is probably what a lot of the financial advisors that were telling Morgan Housel he made the wrong decision by paying off his house were probably showing him in spreadsheets, which is, if you, let's say your mortgage rate is 3%, okay? You were lucky, you got the 3% mortgage rate. You have an opportunity to go take money, save it someplace else, get a higher rate of return on it than what is the interest rate on the mortgage. And some people say you can take that money, build it up, and then pay your house in full that way. But most people are saying, no, you know, if I'm outperforming my home mortgage rate in other investments, you know, why wouldn't I do that? Also, you know, just historically, we have done very well in the housing market lately. I mean, everybody's house prices are just shooting up. But that's not always typical. You know, if you look back in history, the value of homes haven't always just skyrocketed. I'm not just talking about 2008. I'm talking about way before that. You know, real estate has not always been a good investment. And I also always tell people, and I did this in my property income, you know, or a property investment video, which is, you know, you really have to actually put together all the costs that you are putting into the house to really calculate out your rate of return. People just go, you know, I bought it for $500 and I sold it for $750, and look at that $250,000 gain. You're not calculating in any kind of expenses that went into that home, like property tax, HOA, you know, any kind of repairs that went into the home, any of that kind of stuff. And most people, if they would actually calculate that in, would see that the rate of return on their house isn't as phenomenal as they think it is. Now, does that mean that's the case in all the cases? Of course not. Of course, there's somebody out there who probably made a 30% rate of return on their property that is screaming at me right now. But most people are not going into that kind of detail. And so they don't realize that maybe their 20% rate of return that they think they had is actually more like a 10% rate of return over a 10-year period. Is that a great investment? I don't know. Right? So there are other places that you could put your money that could do better. And that is an argument that people will say, well, invest it someplace that you can get 6, 7, 8% rate of return. And then, and then you can either pay your house off, or you have the income coming from that investment that can pay your mortgage, right? That's kind of the argument. And it's not a bad argument. I don't disagree with that. That is possible to get a rate of return higher than your 3% interest rate, and it can offset it, right? Also, potentially there is lower taxes. You can use some of the mortgage to have as tax deductions and other things like that. I have never found that it has helped us a huge amount on our personal taxes, but if you find that it helps you with your taxes, that is obviously another thing, because you can write off interest, right? And you could be losing that if you pay off your house too early. Also, emergency fund, we already kind of talked about this, but liquidity, making sure you have an emergency fund someplace else so that you're not forced to do something like take money out of your home, without having a buffer, which is an emergency fund. You will always hear me say an emergency fund is very important to think about. So when you're deciding through, yes, I should pay off my house, and no, I shouldn't, here's some considerations. One is your interest rate. What interest rate do you have? If you have a 3% interest rate, the argument of paying off your house early gets harder and harder, right? It just does, in terms of math, right? Because there is a chance that you could go get a better rate of return someplace else, just like we just talked about. And so that's one thing. Your personal financial situation is another thing. If you have tons of debt, like you've got student loans and you've got some credit card debt, and like paying off your house probably should not be the first thing you're focusing on. We should focus on getting rid of student debt or credit card debt or anything like that. You have to also consider your future plans. What are we trying to accomplish? Are we trying to retire early? Are we going to retire in this house? Or are we going to be like the many Californians who have left and go someplace else to retire? That makes a big difference. Are you going to pay off a house that you might just be leaving in two years? That might not make sense to do financially. So what are you trying to do? Are you trying to retire there? Are you trying to retire someplace else? That could be a big determining factor on that. Also, like we talked about, emotional factors. How does it make you feel when you think about paying your house off early? Does that make you joyful inside, or is you kind of like, whatever? If it's whatever, then maybe that paying off your house is not the right thing. If it makes you feel confident, secure, like you've gotten a handle on your finances, then maybe we should look at that more. The emotional impact of having your house paid off, do not underestimate that, because it is so important to feel secure in your finances. And if this is one way that you can do that, this might be the avenue you should take. So, there's always alternatives to paying off your mortgage early. You can always refinance, which obviously I would not recommend doing right now, probably, because of the way the interest rates are in 2024. But, there are always some options that you could refinance for a lower rate, which a lot of people did. A lot of people did it. I would say, this is an opinion, of course. I feel like a lot of people just jumped at refinancing because they saw, I could bring my 5% down to 3%. And they didn't calculate in the fact that you're going back to a 30-year mortgage, and I feel like there was a lot of refinancing just to bring your monthly payment down, but not thinking about a long-term effect of things. And I think that that's wrong. I think that those decisions need to be made with numbers and has to have some homework assigned to it. So if we ever get to a rate again where we would be refinancing, I don't know how you'd refinance down from 3.5%, but let's say, people have 8% and they're refinancing down to 5%, let's say. Do the math. Don't just go, oh, look it, I'm going to pay $400 less a month. Don't do that. Really look at, is this going to be saving you money in the long run, or is the bank actually going to be making more money from you because of the length of time on your mortgage getting extended? That's the thing that people don't talk about. Okay, and so they always say, oh, and there's this thing, I love many mortgage people, but there are some mortgage people who use this argument of, oh, we can, you can lower your, mortgage payments by $500, and you can take that and invest it. That happens sometimes, but it doesn't always happen, right? Maybe it's going to the update of the backyard or the other, that's not always the case. And so unless you have a really good plan, financing can be a good or a bad thing. Okay. And I think people just jump at refinancing way too fast and don't think through all the consequences on that. Some people who I know, like clients and friends and everything, who want to pay off their house early will do partial payments. So they will do, $100 more a month, on their mortgage, and that's what they do. I also have other people who will do, will invest it someplace and then pay off chunks. They will save it in a high yield savings account and pay off quarterly, higher amounts. There's lots of different ways you can make this work if you are trying to pay off your house. The strategy is easy. We can figure out what a good strategy is for you if you want to pay your house off. I think the bigger thing is doing the numbers to make sure that that's what you want and that it makes sense to do that. Like I said, I'm going to share my personal story. Obviously, I obviously think paying off your house is okay because I did it. And it has, I will tell you, has made it so that we are able to save at rates that we never thought we could. We are disciplined with how much we spend, but we're also able to, enjoy life a little bit more. And I am one to believe that, we spend so much time waiting to get to retirement to start enjoying life. And I think that that's a problem. And so for us, getting to enjoy life a little bit more while we're younger, while we're still saving for retirement, while we're still working, helped us a lot. And it is a nice peace of mind to have your house paid off. So I would say for a lot of people, having your house paid off could be a very beneficial thing. And so when somebody says to me that their goal is to pay off their house, we do the math, we do all that, but that is an emotional decision because that is going to build their financial confidence. That is going to build their financial muscle in their minds. And I very rarely talk people out of it because yes, I could take their money and invest it and make a fee off of it and tell them to pay it off that way. I don't do that. You know why I don't do that? Because the market's up and down. And I don't want somebody losing money in the markets right when they're trying to pay off their house. That would be devastating to me, to been the advisor to tell them to invest it with me, take a fee on it, and then do that. I often will say, let's do a timeline, let's see. Sometimes it makes sense to invest it, but a lot of times, with the way the high yield savings accounts are right now and the rates that they're getting, it might just make sense to put in a high yield savings account and build it up and pay it off that way. So we look at different things, and I would caution anybody who your advisor is just telling you to invest it with him or her so that you can pay it off later without showing you math, without doing the work with you. Because to me, that means that they just are trying to make more money. And that's not what we're here for. I make a very nice living, but I do it the right way. And that's what should happen. And so with that, I do think that a lot of people could benefit from their house being paid off. If anything, just have a clear conscience Make sure that they feel secure in their finances. And, you know, it does allow you to build up your savings so much faster than you ever thought you could just by not having that. And I think there's a mental issue with that too. Mental and that sounds weird what I just said. Mental issue with that. I think there's something that helps your conscience feel free and feel like you can save and feel like you can enjoy life. And I think that is underrated by a lot of people. So I think for a lot of people, paying off your house could be a really good thing. For some people, no, don't pay off your house. And that's fine. And if you sit there and go, why would you do that, blah, blah, then that you're not in the right mindset to do that. So don't pay off your house. It's okay. Keep a small mortgage. Do everything that everybody else has said to do mathematically. But I agree with Morgan Housel. It is freeing to feel like your house is paid off. So with that, I hope that this was beneficial. There are pros and cons to everything. Always go through this with your financial professional or on paper. Do an Excel spreadsheet. I have plenty of them because my husband and I did them a lot for our situation. And just make the right decision that's for you. Don't let what society has told you dictate this important decision. It should be based off of you, your situation, your emotions, and the math, which nobody likes doing the math, but the math is important in this case. And you can use Excel very easily to do math if you don't want to do math, which I don't like. I mean, I like math, but I'm not as good at math as everybody thinks I am from being in this industry. So with that, it has been an honor taking you through this. Thank you so much for spending your time with me. I know that your time is precious, and I really hope you got something out of this and sticking to the end like you did. The next one is going to be about high yield savings accounts. I am still stunned at how many people don't understand how high yield savings accounts work, what benefits they have for you, how to work them, how they make sense for you or don't make sense for you. A lot of people make sense though, just FYI. So let's go through what the heck is a high yield savings account and how am I supposed to use it in my planning. And with that, I want to thank you again for being here. Hope you got some good things. I would love to hear your comments below. Even if you disagree with me, I want to hear what you have to say. And, let's create a dialogue and let's talk about paying off a house, All right. So thank you so much. Have a wonderful day and keep doing the math so you are making the right decisions for yourself.